On the road again. We're doing another Friday Financial Wrap-Up with Mr. Michael Zuber on the road today. How are you, Michael?
I'm doing very well. Shout out Lance Lambert. He is hosting his first Resi Day. I am lucky enough to be a speaker. So yes, I am in New York City this morning. Going to spend some time with my daughter and then enjoy Resi Day tomorrow. So if you're in New York, come by, say hi.
I love it. I love it. Resi Club. I love it. So Lance Lambert, we love too, by the way. Guy's brilliant. Was a writer for, I believe, was it Fortune magazine?
Correct. Yep.
And now doing his own thing. Resi Club, check it out. It's great. Let's go ahead and get into it. Now, we're recording. This is for November the 8th, 2024. We just had the election Tuesday. We're going to talk about the election. We are pre-recording this on Thursday morning. Michael's traveling, so we're recording this Thursday morning. Pre-Fed announcement. Let's start with the election, Michael. What were some of your takeaways from the election? What did you see? What are your general thoughts?
I think generally speaking, I had two kind of takeaways. The first one being the polls were way off. I didn't see any polls that were close to what the apparent results appear to be. So again, I think the pollsters, they just don't understand that. I guess the world is different. Maybe a part of the population doesn't reply to polls. Maybe, calling people who don't have phone lines. I don't know what's wrong with the polls, but the fact that at least everyone I saw called a 50-50 race and really close. And based on the results, it wasn't. The first one is polls are wrong. And then the second one is kind of encouraging. I think, maybe it's a hope because of what you and I do. So I could certainly have a bias, but it certainly appears that the mainstream media, who is very doom based, right? Since I was a kid, it was always, if it bleeds, it leads. It's always the most negative. It's always the most hateful. It's always the most just negative. It's pre-scripted. It's almost TikTok news, right? Give it to me in the shortest, bite-sized chunk. Hopefully that's over. It appears that something was very influential in this election was long-form content. We're talking 2-3 hours of content, really trying to get to know someone. And I don't know if it's an aberration, but it is certainly a hope of mine that we've gone away from the bite-sized TikTok doom, highly scripted, highly edited nonsense to, hey, let's have a real conversation. And again, I admit to being probably biased because we create content almost every day, but it's nice to see that long form content appears to have been a significant difference.
1000% agree. I woke up the next day after the election and I was so excited. I called 3 or 4 people, and you were one of them. And basically my epiphany when I woke up, I didn't think this during the day, but the next day was mainstream media was the big loser, and that basically sound bites and everything you said spot on. And then how I would add to it is that the fact that today the audience wants authentic, real content, and that's why the podcasts were so influential in this election. Big Hollywood elites, that was kind of one of the things too. Big Hollywood elites and celebrity endorsements were not the same. It was more like what happened, I believe, on digital media and or podcasts. Michael?
I think that's a great point. I forgot about that. Another huge loser, and I'm here for it, is Hollywood, right? The whole, they're mostly paid endorsements.
Yep.
Right? You pay somebody $10 million to show up for 90 minutes or whatever it is. Is that really? Really? So yeah, Hollywood elites lost. I'm here for it. The country is not LA, right? It's not Hollywood. And big loser was Hollywood, and I'm here for it.
Yeah, there was a time, and I'll just share a little nostalgia because I also called Thatch, our good friend Thatch Nguyen, and one of the things nostalgically when we were young, Thatch always had this story, right? Like it's just the kid that came from Vietnam, refugee to millionaire hero, That was always a theme. Even in the early 90s, Thatch knew he was going to be a big deal. And one of the things he always talked about when we would have masterminds is that, and I feel like he would be completely okay for me to share this. This wasn't a super private, intimate thing. He talked about this all the time, and that he was going to be on Oprah, and tell his story. And that was going to be a big deal because in the 90s and early 2000s, getting on Oprah and telling your story would be kind of the biggest platform, the biggest stage. Well, I called Thatch yesterday, post-election, and I said, bro, you are Oprah. You are the new Oprah. You are the new Oprah. You're already inspiring millions and millions of people globally, worldwide, with everything he does with his content. So any last thoughts on this?
No, I think that's absolutely right. I mean, there was a time and day. I mean, look at Robert Kiyosaki as a great example. He was nothing until he made it on Oprah. Today, you don't have to do that. You can start your own thing and be authentic. And Thatch has a bigger reach than anything. I mean, just look at what Joe Rogan's podcast did with I haven't checked recently, but with Trump, I think it had like 43 million views just on that platform. Then it was on X, and then it was on Spotify. It was probably 100 million. Then you add in the clips. There's nothing like it. Mainstream media could wish to get those kind of numbers.
Absolutely. What a time to be alive. What a time to be riding on Michael Zuber's coattails, being a part of the One Reel at a Time community. So I love it. I love it. So let's keep going. Let's talk about Fed Day. What's going to happen today? Today's a big day. Today's Thursday. We're recording this. This will have already happened, but what do you we don't know. We don't know. This isn't Friday. This is Thursday. What do you think is going to happen, and how will it impact the market?
Well, the first thing we need to acknowledge is normally Fed Day is Wednesday. This was the first time that I could recall in years that the Fed moved their meeting, because usually it starts Tuesday. We get all the information Wednesday. This month, smartly, great job, they started Wednesday and they will tell us Thursday. That's important. The election happened Tuesday. We had results. We had a decision late Tuesday Pacific time. We've had the final counts in Nevada and in Arizona. It's now done. And I believe, and it'll be interesting to see, the Fed has to answer what changes. I believe President-elect Trump changes Fed policy. Now, I don't mean that the president is going to come in and make the own decisions. I'm saying the Fed knows that there will be a new sheriff in town. The new sheriff in town appears to have the support of Congress, had the Supreme Court. I mean, there's a lot stacked behind him, so he can do a lot, it appears. And I think the Fed has to answer for it. What's going to change? Are we going to get a wave of tax incentives? Are we going to have inflation 2.0? Are we going to have $2 trillion in deficit spending? Are we going to have some housing programs? I think there is a lot. I mean, are we going to have a smaller government? Is there going to be mass layoffs? I think there are a lot of unknowns, and I would expect the Fed to talk about it. Now, what do I expect? So again, this happens in a few hours. I expect Jerome Powell to be asked 10 different questions, and I expect him to not answer any of them about what has changed. I will be looking for, in about 6 weeks, I think it comes out. I think it's 6 weeks, something called the Fed Minutes. Because again, I don't expect Powell to give us anything, but I suspect the Fed Minutes will highlight a lot of discussion. Because again, you've got to imagine everything I just went through. I mean, inflation 2.0, higher unemployment, less tax receipts, bigger. I mean, I'm just sitting here thinking about what changed, and it seems like a lot to me. So it'll be interesting to see if Powell admits it. The biggest question I have, tying together all of that with the Fed mandate, is, did the neutral rate change? Going into this decision, the neutral rate by most Fed presidents was assumed to be, let's call it 3.25. Let's split the difference, 3 to 3.5. Let's call it 3.25. Michelle Bowman being the only one that I recall talking about a 4 handle. Let's call it 4%. That's a meaningful difference. Everything that I just went through, in my mind, my simple mind believes that the neutral rate, or what they call R star, might be yanked higher. So then I think about neutral rate being higher. What does that mean? Well, A, less rate cuts. B, less rate cuts. The next thing I think about is does the Fed want to get there faster or slower? Because part of me thinks about, okay, we got a new guy coming in. We know what's going to happen. Let's get to neutral ASAP. I could see that logic.
Yep.
I could also see the logic about, wow, huge change, don't know, let's go slower. And I think there's validity in both answers. So I'm gonna be paying attention to what Powell says, because part of me really does believe he's going to come into this, or their group's going to come in and going, we better get to neutral ASAP. Let's cut fast. Let's get to the bottom so that we have flexibility either way. But again, they might just go slower. So I am really perplexed on where we go, and I'll be looking forward to Powell's clarity. And then more importantly, on Friday, we're going to start to get Fed presidents. Again, the blackout period will be over. We will probably get somewhere between 10 and 20 Fed speakers, and I will be looking at all of them in the next 7 days. Because frankly, I'm confused, Ty. I mean, I don't know which way this thing's going.
Yeah. It's interesting. So many interesting thoughts in there, but that if they go fast and say, okay, let's just get there, let's get the rate. Is there something that we don't see that's not so public that, okay, we need to get these rates down quick because otherwise there's a bigger problem, liquidity, or who knows, right? Another issue down the road.
Yeah, I mean, it's a huge question. And again, sometimes you got to think about the market. Would the market perceive the Fed going faster as a negative?
Right.
Maybe even probably. Again, and as I said earlier, and I freely admit, I have no idea where this thing goes in the next 48 hours. It's so many moving pieces, and maybe the answer is do nothing. Could be.
Yeah. It's interesting too that, I mean, if they go fast, it could be inflationary, right? It could spark a whole nother wildfire, right? That's
absolutely
the other side of it.
No question.
That really transitions, and that goes to the next point. This is so important because I think, just again, even still, I don't completely understand it. I feel like I understand it at about an 85% level. But explain to people in a simple way, 10-year treasuries, 30-year mortgage rates, right? What we all that's our real thing, right? Even if the Fed cuts and the 30-year mortgage goes up another 20 basis points or whatever, it doesn't, didn't help the real estate market per se. Maybe it did in the long term, but not in the short term. Talk about what you see in the 30-year mortgage. Explain the 10-year treasury. Where are we at? What the hell is going on right now with mortgages?
Yeah, so again, we got to remember the Fed doesn't control mortgages. Frankly, doesn't even control the 10-year. The Fed controls what's called the overnight rate, and it sets the base for everything else. So what has happened in the last, 48, 72 hours is we've had an election. There's been a clear winner. And now the 10-year market is really seems to be selling off. What does that mean? That means that people are exiting the 10-year treasury, selling it, and rates are going higher because they're moving cash or liquidity into other assets. I mean, just look at what happened to the stock market. Look at what happened to Bitcoin. It was basically risk on, crash up, assets, risk on. So the 10-year note went up drastically on Wednesday.
Yep.
And, that means mortgage rates went higher. And, 10-year treasury, it seems like it was just yesterday, was near 3.5, 3.6. Now it's near 4.5.
Yep.
So that's the 10-year. Then traditionally what you do is you add a spread. Because again, 10-year notes and 30-year mortgages, right? 30 years is obviously longer than 10. So typically the average over the last multiple decades is 180 basis points. So if the Fed note was 4%, you add 180, mortgages are 5.8 or thereabouts. Over the last year or so, that is expanded. And actually the last several years it expanded. The largest spread that I recall was 311 basis points. So again, 4%. 10-year plus 3.11 equals 7.11 mortgages. Today, or last time I checked, yesterday, the spread was 265 basis points. So we've come in a little bit.
Yep.
But here's the riddle. Over the next 6 weeks or 8 weeks before inauguration, do banks get more conservative or less? Because I don't know where this goes. Could the spread get lower? Could the spread get higher? Again, we're going to have to figure out what's going on. So mortgage rates are up. They're already up over 7. I would suspect investor loans are in the high 7s, low 8s. The buyer's market is stronger than ever if you're doing the work. So yeah, rates have hurt first-time home buyers. They've killed demand. I would not want to be a seller in this market. The real estate market is in a bad spot, which again means it's great for investors who do the work.
Yep, 100%. So, and again, couldn't agree with you more. What a great breakdown too. Just explaining, okay, 10-year treasury, let's just say 4%, add 180 basis points, almost 1.8.
Yeah.
That's how you're getting your 30-year rate traditionally. But again, the reason why they had 300 basis points was because who knows where rates are going. There was a lot of uncertainty in the market. We were hoping that we were getting into a more stable and certain time. That's why rates were coming down, say 90 days ago, 2 months ago. But all of a sudden now we're in a weird time again. Okay, what's going to happen next?
Yep.
Is it going to be inflationary in terms of the marketplace? And very, very well said too about money leaving the bond market, people moving away from the 10-year to be more risky. And it's interesting that bank stocks were up, not based on a couple things, deregulation and thinking that mergers and acquisitions would be a big thing under the new Trump administration. So
yeah, and housing was down. Look at the home builders were down huge. Cost of capital, labor, inflation. Again, there are already decisions being made in the stock market about winners and losers. So yeah, pay attention.
Very interesting. Well, let's finish on opportunity. Obviously, as you said, very, very short. Hopefully listeners, viewers caught it. We are in a buyer's market currently.
Yeah.
Days on market are long. Break it down, Michael.
Yeah. Again, we called the buyer's market, and thankfully we did 6 or 8 weeks ago. It is here to stay. It will be here all year. The longer rates stay above 7, it will continue. There's a chance, Ty, I don't know if it's a good chance, but there's a chance that this buyer's market, extends to the summer. I think we have learned something. I mean, we have had rates going between 6 and 8% for the last year and a half. 7% is a clear no-go. 8% is a frozen tundra. So the closer we get to 8%, the less transactions and the stronger the buyer's market. You want to be somebody who is doing the work, knows great deals, will negotiate, follow up, because there are motivated sellers. There are some, Ty, you know this, but we are near the end of the year. Some sellers want this transaction done before we get into a new year. If there are less buyers, aka demand, the buyers that are left have all the power.
Yep.
So I'm excited. I know it sucks for first-time home buyers. It is what it is. So, sorry about that. It is what it is. So again, I'm excited for where we are. I'm excited for the folks in our communities that are doing the work. But we might do, I don't know, 3.6, 3.7 million transactions on an annualized basis. This transaction thing is going lower.
Yeah, it definitely feels like that. I know that in all the realtors and all the hybrid investor agents I'm talking to, anybody in the ORAC community, I'm saying prepare for it. Make a business plan for less volume of transactions in the local market. And then, of course, make your plans based on the fact that interest rates are probably going to be sticky above 7%.
Yeah, I mean, what's the downside of doing that, right? Let's prepare. Let's not get run over.
Right. Absolutely. Can you also just recap real quick, though, because you were breaking up, just talking about that 6 to 8%. You said 8% is a frozen tundra in the market. And can you just recap that short little 20-second piece?
Yeah, sorry, my phone went off. So again, we have learned something over the last 2 years about what stops and initiates demand, called marginal demand. 6%, anything close to 6%, demand comes back in a big way. 7% stuff stops. 8%, it's frozen. So today, I think we have mortgage rates just over 7.1, something like that, which means slow, which means AKA buyer's market. If we get a reignition of inflation, if we get a reignition simply of inflation expectations, if we get banks growing the spread because they're nervous, we could be back at 8% in a heartbeat. And that just means a lot less transactions.
Very interesting, folks. Very interesting. Opportunity. Do not get paralyzed by the fear. It is opportunity. And speaking of opportunity, Michael, you've got an event coming up in Vegas. I know that VIP is probably getting closer to sold out. Mm-hmm. We don't have to necessarily go through the numbers, but tell people about what's going on in Vegas in February 15th, 16th.
Yeah, we'll be doing the ORAD event. We do it once a year. It's like no other event. We bring in millionaires that are on my channel, so you get to meet them face to face. You're going to get 300 to 400 other amazing folks that are in the community that are go-givers. This is an event like no other one. We don't sell anything. We give about 20 to 25 minutes on a topic that I design, and then you get to stand up and ask questions. We provide the opportunity in the VIP sections for 6 hours of networking. I feed everybody this year. I'll be feeding all 400 people, general admission, VIP, same deal. And we're off strip, which is a big deal. So you're not going to get distracted by the casinos and things of that nature. It is an event like no other. And it's February 14th and 15th, or 15th and 16th in Vegas, President's Day weekend. So no excuses. You can travel home on Monday. It's a holiday, and bring your family. We're going to have a husband-wife team kick off both days, Saturday and Sunday. So it's a well-designed event, and I look forward to seeing everybody.
Yeah, and I would say it's like not like the anti-event, that it's not like any other seminar or event you go to. Like, everybody's hanging out together. It really is like everybody's fellowship, hanging out, answering. All questions get answered by everybody. Everybody's there to share. There's no pretentious, weird backstage, none of that. It's like, it's an open forum. Everybody's hanging out. The only difference I would say is that if you want to really get even more, like deeper with the speakers, buy the VIP ticket, because then we have lunch together. That's the only difference. But all questions get answered. Thank you, Michael, for all you do. Have a great weekend. Thank you, brother.
You too. Take care.